In this video, we're going to explore remote account opening. This includes the strategies that you can use to open accounts with top banks around the world and major red flags that you need to avoid. But before we get started, make sure you hit the subscribe button and the notification bell so you get alerted every time we post new non-resident banking opportunities. Now, to help you get started with remote account opening, we have a free non-resident banking starter guide. It's designed to help non-resident and foreigners open bank accounts. So don't forget to download your copy using the link in the description below. Okay, first things first, let's make sure we're all on the same page. What is remote account opening? Remote account opening is the act of opening a bank account at a bank without physically showing up in person. Now, there are several remote account opening methods that you can use, including online applications, virtual meetings, alternate locations, and more. We'll explain these remote account opening strategies in further detail later on. Now, be warned, remote account opening is not nearly as easy as it used to be. In fact, opening accounts remotely is a serious challenge for most people and businesses. That's why we're going to discuss which strategies you should use, common mistakes that can trip up applications, and how anyone can get started with remote account opening today. So why has remote opening become so difficult? Well, banking laws, compliance rules, AML and KYC procedures, and bank reporting obligations are the strictest they've ever been in history. And they're only going to get more intense as time goes on. And the new rules have severely impaired the ease and availability of remote account opening at banks all around the world. In other words, remote account opening opportunities at top-notch banks aren't easy to find, because for most banks today, remote opening for certain groups is a huge compliance risk. To start, let's discuss the main options for remote account opening. Then we'll explore some of the common challenges, mistakes, and pitfalls people make and how you can avoid them. Okay, when it comes to choosing banks for remote account opening. When it comes to choosing international banks for remote account opening, there are a few things to consider. Of course, the basic qualifiers that you should look for when selecting a bank for in-person or remote opening still apply. But we won't discuss those here since we've covered them quite a bit in previous videos and in articles on our website. For a quick primer on bank selection, check out our offshore banking guide here in the link below. Now, let's take a look at some of the more unique characteristics that will ultimately dictate whether or not a particular bank will open accounts for you remotely, such as number 1, domestic banking regulations. Choosing a bank for remote account opening starts with knowing whether or not you are legally allowed to open accounts remotely in a given country. After all, each country has different banking regulations, and those regulations will dictate whether or not it's even possible for a bank to accept remote applications. Due to recent developments we've seen around the world, like a pandemic, we're seeing laws, banking regulations, and onboarding procedures change. In fact, several important banking jurisdictions who previously forbade remote account opening have recently modified their policies, allowing banks to accept remote applications for the first time in years. That said, make sure you find the best countries with supportive banking regulations and the specific banks that allow for remote onboarding before you spend time or money pursuing remote account opening. Number 2, internal bank policies. The next consideration is whether or not the specific bank itself allows remote account opening. Even though a country or local banking regulations might not strictly prohibit remote account opening, banks there can make up their own policies. And some banks will err on the side of caution and create internal bank-wide policies prohibiting remote account opening. Now, banks may prohibit remote account opening for a number of reasons, such as reducing compliance expenses associated with identity verification, minimizing risk, eliminating the chance of having an unsavory client slip through their fingers. Alternatively, the bank might be solely focused on the domestic market. There's no need to have risky remote account opening options available for high-risk applicants or non-residents. So ultimately, banks are looking to reduce the cost of compliance and identity verification, minimize risk, discourage unsavory clients from applying, and they avoid upsetting regulators and international authorities. Whatever the case may be, if your goal is to open accounts remotely, choose banks with internal policies and local laws that allow for remote account opening before applying for the account. Number 3, experiences of similar clients. Next, and likely the most important, is knowing the experiences of other clients just like yourself. For example, even if a bank operates in a country where remote account opening is possible and the bank itself allows remote applications, it doesn't necessarily mean that the bank will let you apply remotely. Not surprisingly, banks deny applications for a wide range of reasons. And while it may be difficult to pin down the exact reasons why certain applicants are rejected, it's still entirely possible to draw parallels between similar client types and risk profiles. That's why it's important to know the account opening experiences of similar clients at banks where you're opening accounts. This becomes even more important when you are interested in remote account opening. Knowing what others experienced is invaluable. What additional requirements they had, the additional documents they had to provide, and at what stage, what answers triggered enhanced due diligence, who wasn't able to apply remotely and forced to physically come into the bank. The bottom line is this: knowing what your peers experienced or clients with the same or similar risk profile experience can tell you what specific challenges you'll face, what the extra requirements might be, where the hidden stumbling blocks are, and ultimately what your chances of success will look like at that bank. Next, how to find useful and accurate information. So, how do you find accurate information about remote account opening? Well, analyzing bank policies, past opening data, and peer experiences that will realistically help you open accounts remotely would be both time-consuming and nearly impossible for a single person to handle. Fortunately, there's an easier way. If you become a GlobalBanks insider, you'll get access to actionable information and much, much more. But I'll touch on more of that in a little bit. Next, we come to remote account opening red flags and warning signs. In addition to knowing which banks will accept you or your business, you also need to know which specific banks are financially sound, well managed, and less prone to operational hiccups. In other words, which banks are actually worth your time and money. With this in mind, let's take a look at some of the red flags to be aware of when considering remote account opening. Sadly, these often go unnoticed, overlooked, or ignored. And ignoring the warning signs is an expensive mistake that can lead to problems down the road. Some of these red flags include low quality banks, extortionate fees, poor customer support, understaffed, underfunded, or lax compliance departments, erratic account freezes and termination, and finally, unpredictable correspondent banking relationships. Now, just because there's one or several red flags does not mean that you should skip over a bank completely. But when red flags appear, it's best to take a closer look and examine if that bank is likely to meet your expectations for quality, stability, safety, and convenience. Here are some common red flags to watch for when pursuing remote account opening. 1. Non-existent or weak identity verification requirements. Make sure the bank you're choosing follows proper customer due diligence, or CDD procedures, when assessing applicants and onboarding new customers. If the bank isn't properly verifying the identity of its customers and isn't asking standard documentation, then something is usually off. Often, this is a sign of poor compliance or a bank that is desperate for cash. These days, banks with poor compliance attract scrutiny from regulators, international authorities, and correspondent banks. And this can lead to investigations by authorities, unpredictable waves of account freezes, and termination for certain client types, and even the bank closures. Some examples of recent years include ABLV in Latvia, BPA in Andorra, Caledonian in Cayman, Versobank in Estonia, and FBME in Cyprus and Tanzania. And while many customers get their money back, eventually, some don't. And it's important to remember that banks with unpredictable freezes, termination, and account restrictions can leave you financially stranded and cut off from your money for long periods of time. Number 2, high fees for opening and maintaining accounts. Thanks to international competition in the banking industry, most people can now access decent banks with reasonable fee structures. But unfortunately, many people still get fooled into opening accounts with banks that charge extortionate fees. When considering banks that charge abnormally high fees for application submission, to conduct basic initial due diligence, or for account opening, you may want to think twice before applying. Number 3, banks that cater to high-risk businesses or individuals. If you're involved in a high-risk industry, this red flag probably won't apply for you. In fact, you're probably looking for banks that are familiar with and regularly onboard high-risk clients. But if you're not involved in a high-risk industry, you may be better off avoiding smaller banks that are known for taking on high-risk clientele. Banks that derive a significant portion of their business from high-risk clients often attract scrutiny from authorities, and this can negatively impact your accounts. These banks are often small, based in lower quality jurisdictions, and charge higher fees. Number 4, require you to hire local introducers. Yes, this is a common approach for remote account opening, but in the majority of cases, it's a useless service that doesn't actually serve your client interest. Instead, it exists to put your money into the pockets of local service providers. In almost all cases, if you can open a bank account remotely through an introducer, you will be able to do so on your own. If a bank requires an introducer, this usually means that they don't have your best interest at heart. In other words, you'll be better off banking elsewhere. Number 5, they require you to hire local managers or directors. In some countries, appointing a local manager, representative, or director is required to open a bank account. In fact, it's not uncommon for introducers to say they can help you open accounts and then just require you to appoint a manager or nominee director of your company. But the major disadvantage of this approach is threefold. 1, you give a third party control over your bank account. 2, your business now runs the risk of incurring local tax liability. And 3, it's pricey. Plus, if you ever want to add yourself as a signatory on the account, you'll need to go through the same due diligence procedures and show up in person anyway. So, many people find that hiring a local representative, manager, or director is too costly and not worth the headache. That said, some may prefer to simply find a different bank. And before we end, here are some other important considerations. The above list is not exhaustive. In fact, there are several other red flags and obstacles to watch out for when attempting remote account opening. Instead, think of this as a quick primer to help you think through your own remote account opening strategy and options. That said, you also need to be on the lookout for bank-specific warning signs and danger signals before opening accounts with a new bank. Some of these examples include poor financial health via liquidity and solvency ratios, high-risk business activities or low-quality lending, toxic investments, banks located in high-risk jurisdictions, banks located in jurisdictions that are on FATF Black or Grey list or the EU non-cooperative jurisdictions list, banks that are infamous for having horrible customer support, banks with online banking restrictions, operational inefficiencies that are known for having accounts that are difficult to manage remotely. Remote account opening methods. Okay, now that we've covered which red flags to watch out for, let's discuss a few of the more basic remote account opening strategies. As mentioned, there are several methods and strategies that you can use for remote account opening. But knowing which ones will work best for you ultimately depends on your risk profile, deposit amount, where you're trying to open accounts, and several other key factors. In this section of the video, we'll cover 4 common methods that people use when attempting remote account opening. If you have questions about other remote account opening strategies, please get in touch with us here, or if you're a GlobalBanks insider, reach out to one of our team members. Remote account opening option number 1, online applications. When most people think of remote account opening, this is the method that they have in mind. When you open an account remotely via an online application, you're confirming your identity, personal information, providing all supporting documents, and meeting the bank's KYC and AML requirements online through the bank's website. What most applicants don't realize is that just because a bank allows a remote account opening for some groups, doesn't mean it's possible for everyone. Sure, a bank might let you submit your application online, but it's what happens after that submission that matters. For example, it's not uncommon for undesirable applicants to be rejected or informed that they'll need to visit the bank in person to resubmit their application. Remote account opening is traditionally most difficult for non-residents with limited ties to the country. Remote account opening option number 2, alternative locations. Now, while this isn't a fully remote account opening option, it can save time and money, especially if your desired bank has operations in other locations. Of course, you'll still have to go through the same onboarding process that you'd undergo if you visited your desired branch in person. But at least by taking this approach, you can reduce the overall time and cost of account opening since you won't have to physically travel to a different country. Remote account opening option number 3, remote meetings. This approach involves meeting bankers at mutually agreed upon locations, often in major cities or even at your home. This option is typically reserved for clients interested in private banking who intend to make large deposits and invest. However, we've also been able to arrange these opportunities for GlobalBanks insiders in convenient jurisdictions as well. Clients interested in this approach to remote account opening are usually asked to deposit between low 7-figure deposits at mid-tier private banks. However, if you're interested in accessing more established private banking options, you normally need to deposit moderate to high 7-figure deposits. Remote account opening option number 4, virtual meetings. Now, virtual meetings are a cost-effective way to open corporate, personal, and private banking accounts. However, in order to use this method for a remote account opening, you need to know which banks have incorporated virtual meetings into their compliance process and can use them as a substitute for an in-person meeting. Not all banks allow this, and some only allow it for certain types of clients in special circumstances. To successfully open an account remotely, you need information that you can trust. That means knowing which combination of account opening strategies will actually work for you, which banks and bankers to contact, and which banks have internal policies that actually allow for remote opening for your client profile. Thanks to our team's expertise, extensive network of banks and bankers, and advanced knowledge on which banks are best positioned to help specific client types, we help GlobalBanks insiders open accounts remotely every day. But equally important, GlobalBanks insiders don't waste time applying to banks that don't meet their objectives or wouldn't want them as a client. In other words, they focus on applying to banks that match their client profile, risk tolerance, and actually value them or their business as prospective clients. If you're ready to get started with remote account opening, you can obviously use the information that we've already shared in this video. But if you want to know which banks will actually allow you to open remotely and which account opening strategies you should consider for your client profile, we can help. All you have to do is join our flagship service, GlobalBanks Insider. With GlobalBanks Insider, you'll get instant access to our entire archive of banking intelligence reports, access to the GlobalBanks database, home to more than 250 banks from 50 plus countries, including detailed bank profiles, client preferences, and a whole lot more. Finally, you'll also get real-time analyst support from our team of experts, ready to answer your most pressing banking questions and to make suggestions on which remote account opening strategies to use and how to best meet your objectives. To get started, just click the link in the description below to learn more about GlobalBanks Insider. And before signing off, don't forget to hit subscribe so you get alerted every time we share new banking opportunities. Thanks so much for watching, and I'll see you next time.